Hi, this is Will Cook of the Will Cook Group at Keller Williams Luxury Homes. Welcome back to my video blog. Today we're going to talk about how the tax reform will affect the real estate market. Today we're going to talk about how the tax reform will affect the real estate market. But before we get started, I'd like to bring your attention to a couple of buttons on the video blog. If you're a buyer, click Search for Homes and we'll send you a list of homes available based on the criteria that you select. If you're a seller, click Free Home Value Report and we will send you a valuation of your home in today's current market. Now back to our topic. I've gotten a lot of questions about this, and there seems to be a lot of uncertainty around the Tax Cuts and Jobs Act and its effect on real estate. So let's first take a look at the 4 key tax changes and its effects on the housing market. The first change is deductions for property taxes. Prior to the new tax bill, if you itemized deductions on your federal return, you were able to deduct the entire property tax bill that you had along with any state income taxes. Going forward, this total amount will be capped at $10,000. The second change occurs around deductions for mortgage interest. The final tax bill reduces the limit on deductible mortgage debt to $750,000 for new loans that were taken after December 14th of last year. Other loans of up to $1 million prior to that time are grandfathered in. The third change, and this was in jeopardy, centers around the exclusion for capital gains. So if you sold your home and you turned a profit, then if you're married, up to $500,000 of that profit was exempt from capital gains. So there was a concern that would be taken off the table. And then it came back in, and there was an attempt to make the requirement that you lived in the home 5 out of the past 8 years. However, in the end, there were no changes to this exemption, and as before, you must live in the home for 2 out of the last 5 years in order to claim the exemption, which still stands. And the final change was for the deduction of moving expenses, which you used to be able to deduct. The final bill actually repealed this deduction, so you're no longer able to deduct moving expenses if you move for a job. The one exception is unless you're in the armed forces, then that moving deduction does still apply. So the first 2 changes increase taxes on current homeowners who itemize and therefore might make homeownership a little less attractive. This is why the National Association of Realtors has come out and claims that we could experience a 10% drop in prices due to the new tax plan. On the other hand, the last change makes it more expensive to sell your home. So as a consequence, there may be more homes that are not coming on the market. We're going to have to see how this all plays out in reality and along with other market conditions. However, there does seem to be a general consensus amongst the experts that the current reforms might drive home prices down a little bit in the midterm. On the bright side, the home sellers do still get the capital gains exemption, which is a huge win for real estate. So, if you've been thinking about selling your home, now might be the right moment to start the process. If you have any questions at all, whether you're buying or selling, please feel free to shoot me an email or give me a call, and I can give you more specific recommendations based on your unique situation. If you have any questions or comments, please feel free to use the comment field below for this video, or please feel free to share it with your friends. Thanks for watching. See you next time.